If the date is mentioned 31/3 as the current year, directly asset side of the balance sheet. Consideration for annuity, schedule number 1 as an income. Surrender claims not paid 12,000, which should be added to surrender in the schedule number 4. Then it will come under current liability. There is no provision for taxation. There is no miscellaneous expense. Totally it will tally for 32,08,200. Hello my dear student, I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. I am going to hand this session, Corporate Accounting 2, 4th semester Unit 2, Session 4 of BCom, in favor of accounting for life insurance. In the last session, I have given the detailed format of revenue account and the balance sheet. So here today we are going to prepare the what's called revenue account and the balance sheet. So they will give the trial balance. With the help of the trial balance and adjustment, now we are going to prepare one revenue account, one balance sheet as per the schedule. Yesterday I told you what are the schedule of the revenue account. First is the premium, second is the commission, third is the operating expenses, fourth is the benefit paid. I will repeat which are the 4 items are. Number 1, premium, which is income. In other 3 are expenses, which are the expenses are commission paid. Then operating expenses. Last one, benefit paid. Come back to schedule of the balance sheet. We have got 15 schedule. But if we learn the 15 schedule, very easy schedules are there. According to schedule, you have to work out, because this time the what's called the electricity company account have been removed. So definitely there is a one problem from life insurance with revenue account and a balance sheet. I will go very slowly the format of schedule number 5, share capital. Schedule number 6, reserve and surplus. Schedule number 7, borrowing. Schedule number 8, investment. Schedule number 9, loans. Schedule number 10, fixed asset. Schedule number 11, cash balance, that is cash in hand and cash at bank. Schedule number 12, current asset. Schedule number 13, current liability. Schedule number 4, provision. Schedule number 15, miscellaneous expenses and losses. Now, we'll go very detailedly the trial. I will explain the trial balance item. Then I will explain what are the adjustments are. So the items in the trial balance should appear only once. The items in the adjustment should appear twice. The items in the trial balance should appear only once. The items in the adjustment should appear twice. We'll go through the problem now. The balance of Janata Assurance Company appear in the books on 31/3/2013 as follows. So the year start 1/4/2012 to 31/3/2013. So mortgages is nothing but a loan. It will come on schedule number 9. Building is a fixed asset, schedule number 10. Loans against policies, once again it's a loan, schedule number 9. Investment, schedule number 8. Surrender, it will come schedule number 4 as a benefit paid. Annuity, schedule number 4. Claims by death, schedule number 4. Claims by maturity, schedule number 4. Agent balance is a current asset, schedule number 12. Outstanding claim of last year, that should be deducted from the claims. Deposit with RBI is a current asset. Premium, schedule number 1 as a income. Outstanding premium on 31/3, and this is on 31/3, directly asset side of the balance sheet. If the date is mentioned 31/3 as the current year, directly asset side of the balance sheet. Consideration for annuity, schedule number 1 as an income. Commission, schedule number 2, paid. Interest and dividend, schedule number 1. Life assurance fund under schedule number 6, reserve and surplus. Then bank means cash at bank. This is schedule number 11. The expenses of management, this is operating expenses. Bonus in reduction of premium, schedule number 4. Interest accrued but not received, directly asset side of the balance sheet. Share capital 5,000, equity share of 10 each, 50 lakh, the schedule number 5. Now, I will explain the adjustment premium outstanding. All adjustments should appear twice here. All adjustments should appear twice. Premium outstanding, that should be added to premium in the schedule number 1. Then asset side of the balance sheet under current asset, where it will come, premium should be added to premium schedule number 1. Then it will come under current asset. Interest accruing but not due 3,700, that should be added to interest in the schedule number 1 premium. Then it will come under current asset. Claims admitted but not paid 10,000, it should be add to claims not yet paid, not yet paid. This is schedule number 4. Add to claim. Then liability side of the balance sheet because it's not yet paid. Then surrender claims not paid 12,000, it should be added to surrender in the schedule number 4. Then it will come under current liability. It will come under current liability. Surrender adjusted. Further bonus utilized in reduction of premium. So we declare the bonus, that money will be utilized as a premium. Add to premium. Premium amount should be raised. Then in the schedule number 4, your bonus should be increased. It should be added to bonus in schedule number 4. Add to premium. As a bonus is an expenditure. As a premium is an income. So in the schedule number 1, for further bonus, the premium will, you declare the bonus. Bonus will not be paid to that particular insured, but the person who has been insured. Tell them your amount have been utilized for the sake of the premium. Okay. Bonus shows as an expenditure. Premium shows as income. I will repeat. The company declare the bonus and tell them your bonus will be utilized for the sake of premium. He says, okay. So first, bonus will be added to premium in the schedule number 1. In schedule number 4, in the benefit paid, it should be added to bonus. Then surrender adjusted against policy. This is nothing but against loans on policy, 5,000. So whatever you surrender is an expenditure. Whatever the loan you have taken on the policy, 5,000 should be deducted from the loans on policy. This is surrender adjusted against loans on policy, 5,000. So first is surrender, benefit 4. Then in the loans on policy means you have to deduct about the 5,000 from the loans on policy. Your loan amount will be reduced by rupees 5,000. I will repeat now. Outstanding premium should be added to premium in the schedule number 1. Then asset side of the balance sheet. Interest accruing but not due, add to interest in the schedule number 1, interest and dividend. Then asset side of the balance sheet under current asset. Claims admitted but not paid, add to claims in the schedule number 4. Then it will come on the current liability. Surrender claims not yet paid, add to surrender in schedule number 4. Then it will come on the liability side of the balance sheet. Further bonus utilized in reduction of premium. You declare the bonus, but that can be utilized as a premium. Add to premium, your premium amount will be raised. Your bonus account is also raised in the schedule number 4. Surrender adjust against loans on policies. This is actually loans against policy means loans on policies. You show surrender as a schedule number 4 as a benefit. Surrender is an expenditure. While you are doing the balance sheet, loans on policy will come by schedule number 9. In the schedule number 9, loans on policy, out of the loans policy, how much money should be deducted? 5,000 should be deducted. So we'll move on to problem now. Your premium received is 30,94,000. See that here premium come 30,94,000. This I have taken 30,94,000. Add outstanding premium how much? 4,500. That should be added. This is 30,98,500. Then further bonus utilized in reduction of premium. That is for this one 5,000 should be shown here. Then interest and dividend. If you see that interest and dividend is 1 lakh here. Interest 1 lakh. Add interest accrued here. What is interest accrued? 3,700. It becomes 1,03,700. Then consideration for annuities granted. We go with one. Consideration for annuities granted 4,20,000. So totally it will come 36,27,200 in schedule number 1. Then schedule number 2, commission paid is 54,000. Trial balance debit side, commission paid. If you go with the Commission paid, how much is there? 54,000. Then expenses of management, 63,000. See that? Expenses of management here, 63,000 over. Then claims by death, claims by maturity. See that? If you go with the trial balance, claims, loans against sponsor, claims by death, claims by maturity, claims by death, claims by maturity, add 17 lakh, add claims but not admits, that is from the adjustment, add the figure, 17 lakh 10,000 minus last year, 2 lakh 20,000 deduct, it become 14 lakh 90,000. Surrender as per the trial balance 25,000. Outstanding surrender is adjusted against loan is 12,000, become 30. This is further surrender adjusted is 5,000. Outstanding surrender is 12,000. From the adjustment, it becomes 37,000. This is further loan outstanding is 5,000. Then bonus in reduction of premium as per the trial balance is 5,000. Add further bonus declared here from the adjustment. Further bonus declared is 5,000. That should be added. It becomes 12,000. Annuity. So what is actually annuity mean? Somebody wants to insure, what's called, put the money in the insurance company. Company will pay just like a deposit. Company will pay back the interest. That is your annuity. So we can deposit here. It is nothing but an income for us. Annuity, they deposit, will pay back how much money? 12,000. So we have to pay back annuity once in a year. That is an expenditure because you have to pay back their money. Totally it will come 15 lakh 54,000. Then we'll go with the revenue account. Once you prepare schedule number 1, schedule number 2, schedule number 3, schedule number 4, then we'll go back to revenue account. In the revenue account, premium 1, interest and dividend, consideration for annuity is granted. Totally it will have 36 lakh 27,200. So these are all the expenditure you got. These 4 are called expenditure. Then go. One is commission paid, 54,000 as per the schedule you have done. Then we have got operating expenses. We have got benefit paid. All these 3, they will go. Expenditure 16 lakh 71,000. This become B. Surplus A minus B. This is your premium is A. This all 3 becomes the B. A minus B. So totally here already got A. Your A is 36 lakh 27,200. This is your B. Then A minus B. This is A minus B. 19 lakh 56,200. Then we'll go to balance sheet schedule. I told you about 15 schedule. I will go through one. Your authorized capital is fees. Your registered capital is 5 lakh. So I told you the last session, issued and called up and paid up. Share capital minus calls in arrears as per period share is the paid up capital. There is no calls in arrears are there. They paid how much money? 5 lakh. Then schedule reserve and surplus. Life fund at the end as per the trial balance. The life fund is 7 lakh 52,000. Add surplus as per the revenue account 19 lakh 56,200. So it will work out 27 lakh 8,200. Then we'll go to borrow. There is no borrowings at all. Investment, under investment you got 12 lakh. Then you have got a loan. Loan on mortgages 14 lakh. Loans against policy 1 lakh 55,000. This is adjusted loans on policy 5,000. That's adjustment. This has been shown in the benefit. Now it has been deducted here. So it become 1 lakh 50,000. So it is for 15 lakh 50,000. Then fixed asset building value is 1 lakh 45,000. Then schedule number 11, cash in hand at cash at bank. So your cash at bank is 5,000. Current asset, outstanding premium. This is from adjustment which we have to receive. Interest accruing which we have to receive. Outstanding as per the trial balance. That's the date. Date they have given. See that we are talking about this premium 35,000. 35,000 directly. Agent balance, debit side asset, credit side liability. Debit side asset, credit side liability. Then deposit with RBI is a current asset. Interest accruing but not raised as per the adjustment is 7,000. Totally it work out 2,85,200. Then current liability, claims outstanding which you have to pay. Surrender claim not yet paid, still they have a surrender but money is not yet paid. Totally, we are liable to pay how much money? 22,000. Insurance company is liable to the extent of 22,000. Then there is no provision for taxation. There is no miscellaneous expense. We will get only preliminary expenses which have been incurred at the beginning of the year. Then once you prepare that, that put into a format now. So this is the balance sheet format as per the schedule, particular schedule number 1 month. This type you have to, as per the University of Mysore, you have to go through with the schedule 15. Schedule has to be filled up. No change in the schedule. No change in the schedule. Share capital schedule number 5, 5 lakh. Reserve and surplus schedule number 6, 27 lakh. Borrowing schedule number 7, there is no borrowings at all. Totally it work out 32 lakh 8,200. This is the total source. Then come back to application of fund, how the fund have been utilized. We have invested 12 lakh. Then loans, we have given 15 lakh 50,000. Schedule number 10, fixed asset 1 lakh 45,000. Cash and other account, schedule number 11, 50,000. Then current asset, schedule number 12. This is actually cash and other account is cash in hand, cash at bank 11. Current asset, schedule number 12, 2 lakh 85,000. Current liability is a liability, that is the 22,000 payable. There is no provision for taxation. There is no miscellaneous expense. Totally it will tally for 32 lakh 8,200. 15 marks question. Schedule is easy, but you have to learn the schedule. Properly, you have to learn the schedule. If you learn the schedule, easy for you. But only thing, you take the above sheet and write one by one. See that share capital schedule number 5. Write in the above sheet. Practice. Share capital schedule number 5. Reserve and surplus schedule number 6. Then borrowing schedule number 7. Investment schedule number 8. Loans schedule number 9. Fixed asset schedule number 10. Cash balance schedule number 11. Current asset schedule number 12. 13 schedule number, current liability schedule number 13. Provision schedule number 14. Miscellaneous expenses schedule number 15. First you have to practice like this. Then inner column it will come. All will come because that's all practice. Then what are the revenue accounts are 4. One is the premium. Second is the commission. Third is the operating expenses. Fourth is the benefit paid. I will repeat. What is the first one? First one is the premium. Second one is the commission paid. Third is the operating expenses. Fourth is the benefit paid. So 4 items are there. Premium, commission, operating expenses we have got, benefit paid. So what are the items? The items in the trial balance directly will come on the balance sheet, either on the asset side or the liability. The items in the adjustment should appear twice, once in the revenue account, once in. Sometimes there is an adjustment. I will give one adjustment. Bonus in reduction of premium. This adjustment, add to premium in schedule number 1, add to benefit paid. So bonus declared but not yet paid. Bonus declared agide but not yet paid. Pay madilla. Bonus paid, not yet declared. A bonus has been declared. Usually here, it won't come to balance sheet. We pay the bonus. Bonus declared madidivi. Bonus na declared madidivi as an expenditure. But that bonus is not given to that particular person. Now, we are saying that money will be utilized for bonus. Okay. First is as a premium, bonus declared as an expenditure. That money will not given to him. That can be utilized as a premium. Premium amount has been raised. But we say to him, your bonus has been declared. This is a bonus for you. Okay, he is happy. But we tell them also, don't worry, your bonus will be usually adjusted to premium, your premium amount. Don't pay the premium. This money will be adjusted to premium. He is very happy because now, if the money is given, he can go for some other expenditure. Instead of that, we tell them now, don't worry, we'll declare the bonus for you once in a year. That money will be utilized for sake of premium. Don't pay the premium. That bonus will be utilized for a premium. So 2 adjustment in the same side, schedule number 1 and schedule number 4. The others are, I will tell you, outstanding claim on 31/3 in the trial balance, directly on the liability side of the balance sheet. If they have same outstanding claims comes in the 1/4 is there, last year that should be deducted. If the outstanding claims comes in the adjustment, add to claims, then liability side of the balance sheet. Then outstanding premium 31.3 directly on the asset side of the balance sheet. If the outstanding premium comes in the adjustment add to premium, then asset side of the balance sheet. Further bonus utilized in reduction of premium. So you declare the bonus that can be utilized. Surrender against loans on policy. First surrender will come in schedule number 4. Then while you're doing the schedule number 9, loans on policies, you deduct the surrenders. These are all the adjustment. No more adjustment. Only this type of adjustment comes. Learn the format properly. Learn the format properly. And all the schedule 15, you have to learn one by one. Schedule number 5, share capital. Schedule number 6, reserve and surplus. Schedule number 7, borrowing. Schedule number 8, investment. Schedule number 9, loans. Schedule number 10, fixed asset. Schedule number 11, cash. Schedule number 12, current asset. Schedule number 13, current liability. Schedule number 14, provision. Schedule number 15, miscellaneous expenses and losses. This way you have to learn. Take the above sheet and make the practice one by one. Then it becomes easy for you. Hope you understand this. I have solved the problem. I have explained everything here. We have go through the problem once again. You please see that, practice that. In the next session, I'm going to solve one more problem for you. So in the last session, I've explained about the trial balance and all the items. This time I've explained so many times the trial balance and schedule. Hope so you understand. Please practice the schedule, all the 15. So schedule should not be changed according to the Insurance Act. You have to practice the schedule. All the 15 should be done. So we'll meet in the next session with another problem. Till then, goodbye.